Good morning. Well, Thursday, the 5th of September, 24. The purpose of this stream is my virtual trading journal. I hear what I was thinking by my narration, and I see what I was seeing by the video, obviously. The idea is that I will take no trades off stream for purposes of accountability and transparency to myself. If anybody else listens to this and gets something out of it, that's really great. I'm happy. But again, it is my virtual journal. And I'm just trying this out to see, what the hell is, what's going on, how well it works. I stream it to YouTube so that I can review it with other devices from wherever. Any days that don't have a trade in them, I stream every day, but any days that don't have a trade on them, I set to private. I mean, why not? I try to get the timestamps as close as I can. And nothing I say or do here is in any way financial advice. All the times that are on my charts or that I speak about are Central Standard Time, same as the CME. And the numbers story now is heating up a bit. Going into the tomorrow, we have ADP non-farm employment change was already at 7:30. Initial jobless was at 7:30. We've got the S&P PMI at 8:45. I guess it is. What else we got? Other 3 stars. S&P services, global services PMI, ISM non-manufacturing PMI is at the top of the hour. So, yeah, and then, of course, the granddaddy of them all is the non-farm payroll tomorrow morning at 07:30. So that, my children, is the purpose of the stream. And now for the world-famous look back here in the pre-market. Obviously, we are looking to open lower in range, same as yesterday. And I determined that by where we are expecting to open. I'm assuming somewhere in this area. We are below yesterday's close and settlement, which is somewhere in here. Wherever that all went, it's our settlement. And we are within yesterday's range. There's previous RTH low and highs way up above us someplace. So that's what constitutes the, or that's how the open statistic study is. Those are the parameters of the opening statistic. And you can't have 55 different parameters to have a data set that is statistically significant. And so let's look at IRT here. Here's a perhaps easier to grasp representation of the overnight. Here was yesterday's market. Real well balanced, very rotational. Come on. Just a slight downward skew, but then recovered a lot of it back in the going into the close. Now we are pretty much rotational. Where did it go? And we basically have a pretty well-defined ETH profile with 2 major distributions here. This is POC. As far as charts go, this is NASDAQ. This is my micro composite, and this is the market profile. These levels here are the price levels generated, obviously, by price or set by price and pushed by IRT to Bookmap. And they are pushed to this cloud notes column right here, and to the indicator that draws these lines at the associated price level. And in a minute, we will look at how the statistics calculate against these price levels, and that's done over here in this study from IRT, which is right there. Again, there's only 4 open types: outer range, higher in range, lower in range, lower outer range. It's gap down, gap up, boop, and there you are. Now, the way this study works is real simple. It looks back at 2003 days. Of those 2003 days, we opened lower in range 605 days, which constitutes 30.2% of 2003. In this open type, price in the upcoming RTH session revisited these levels this amount of times or days, generating this amount of percentage of 605. So overnight VPOC was revisited 512 times, or 84.0% of the time. I go over here and I go to, now unfortunately the current overnight VPOC is right underneath of the value area low. That's this muted yellow is the full session VPOC, so it's 84% of the time. And that is all there is to it, boys and girls. Now let's look at the ETH low, which is a likely, or the ETH mid is generally second in, and that's 83.5%. So we will jump over here and go 83.5, and that's all there is to this statistic story. And it's a statistically, mathematically driven study to generate the percentages, and the price levels are absolutely fixed by price, set by price. The only difference is they're pushed from Bookmap, from IRT here to Bookmap. That's the only place I get involved in that. And putting the levels in is falling off a log simple. So overnight low, hello, can we go? Boy, am I getting bad. The overnight low is 67.6% of the time. So 67.6% of the days where we opened lower in range, we revisited the overnight low this percentage of the time. The volume point of control this percent of the time. The overnight mid that percentage of the time. It's all there is to it, and you enter in the rest of those. Now, the levels here. Let me just get this, or I forget what I'm doing here. It's the wrong thing. I don't want to do that. I'm having a problem here. Okay. The levels. Well, first of all, while we're on IRT, let's look at the micro composite, which is this one over here. Now, this is the micro composite chart, and it is simply a chart of daily bars for the RTH or the regular trading session only. And I draw a volume profile around those bars which have overlapping price. That's all there is to it. And by drawing the volume profile, it automatically generates a micro composite VPOC and other associated volume profile levels, but that's the one primarily concerned with, and that's 56.36. And what I do with that is, and these green lines are the high volume nodes of the market profile in the micro composite, and they push automatically to Bookmap. Any other levels, the high, the low, the VPOC, all that stuff, I enter manually, and I do that right over here. Now this is the This is the high time frame column where I enter manually the VPOC letters. So it's 5636. Oops. So we got to jump up here to 5636. And where did that go? Oh, we're not even there yet. Holy smokes. So here's the VPOC. So it's 5636. It only came down a little bit. Right? That's where I enter it. Here is a previous one, which we've already hit. And then we have the high volume nodes, which are automatically pushed from Bookmap, from IRT to Bookmap. Here's the gap high. Here's the micro composite low, which needs to change down here to no, that's correct. That's the previous RTH low. Okay. Now in the ETH, we pushed that a little further, but we'll see. Here's what I do with these, the difference is when this VPOC, for example, when it is no longer the active current VPOC, I change the text to black. Here's the gap low, which we never did take out yesterday. So that is how the micro composite and the MC VPOC works. I also said, here we go, the previous regular trading session VPOC. I always, at the end of the day, yesterday, I set this naked volume point of control at that POC because this is the most current, this is the POC of the most recent RTH auction. So that's a pretty high number, as is the overnight VPOC and the mid and all those others. And the ETH high and low are usually pretty likely suspects. So let's jump to something else here. Let's jump to the levels, which are pretty important. I guess we'll make that 13. So while we're here, it's important to talk about these levels. I've made a lot of references to them here. Start with the most important, which are the POCs. That's the point of control. The darker yellow is for the full session, which is this column, volume profile. This is the RTH point of control, which is this RTH volume profile column. This is delta. This is the chart volume profile, which just plots what data is on it over here on the left. But the volume points of control are nothing magical. They are simply the price at which the most contracts have traded so far in the session. In other words, right here at 25, 55, 24, the most contracts have traded in the overnight session starting at 1700 last night. The minute this price goes from 46.26 or whatever it is to, and down here is 47 or 46.27, this VPOC will jump over here. That's all there is to it. There's no indicators on any of my charts, by the way, just these lines. This is the VWAP for the ETH. This is the VWAP, or the volume weighted average price, for the RTH. And the red line, wherever it went, is the mid for the RTH period. The IB high and low are nothing special. They are the high and low of the first 1 hour of the RTH trading session, period. They move, the low goes down as price fluctuates down, the high goes up as price fluctuates up, and at 9:09:30 Central Standard Time, they stop moving. Boom, that's the IB is set. And that IB stands for initial balance, which is an old term from market profile days. So there's nothing mysterious about these levels or about the way they work. You can easily anticipate when we're going to have a VPOC migration by watching the levels, by watching the volume numbers over here in the whichever column we're trading in. This, at the moment, we're trading in the full session. In a little while, it'll be the RTH session. That's all there is to it. It's not mysterious or magical. It's common sense, math, and statistics, which is the secret to a profitable trading business, as opposed to a video game or gunslinging or any of that other crap. Now it's important to I'm getting ready to do something here in a minute, but right now I'm gonna do this, I think. I have a 2-lot risk neutral package, which is obviously being able to trade is real important. I have activated the multi brackets. It's 2 lots, 12 tick stop for both. First risk neutral target is positive 12 ticks. The runner's at 48. You have to go up here, make sure the dome is activated, the trading control panel, make sure it's reflecting the proper numbers. I use a dome only rather than both or chart because I initiate trades with a keyboard and I manipulate stops and targets with a mouse. In Bookmap, if you have chart or both activated, anywhere in this live data column, which is right here, inside of this line, you see the mouse change. If you click in here by accident, you entered a trade, which I have done and I don't like. So I use dome only. I initiate with a keyboard and I manipulate stops, targets, or set resting market or limit orders here on the dome. So I can't possibly make a mistake. And I shut that off because I don't believe you should ever look at your P&L while you're trading. But that's that. Now I will get ready to post my daily T-Lab post, which I do every day at about 8:20. I post the market numbers or the report, stuff early in the morning, about 6:30 or so, 6. And then I do this every day at 8:20 to try to give folks in the T-Lab who don't have IRT or a similar charting package just a quick look at any numbers they might be interested in. Where we were, this is yesterday's RTH, overnight, RTH, et cetera, back several days. And it points out the different things. And I take that snap every day and I post that to the T-Lab. And that's kind of my way of giving back to the hell is going on here? Okay, I'm all confused. Sorry. So there you go. And then I post this over to them. And I'll tell you what the T-Lab is here in a second. There we go. Okay, I think I've done all my worldly duties there that are... the T-Lab is a Bookmap Discord chat room. Started by a guy named Tom B. Okay, and it's completely free. And at this point, up until this point, you don't have to even be a subscriber to Bookmap to participate in it. The thing why it resonates with me is Tom is a successful professional trader of his own account in futures. I think I just shut off Bookmap. Shut off IRT. He has been trading for 45 years. He, most importantly, has absolutely nothing to sell. He's not, trying to pimp your ass to take a mentoring or buy an indicator or go to his website or any of that crap. I think he genuinely wants to help traders succeed and maybe pay back a little for the great success he's had. I don't know. But his theories and philosophy resonates with mine. I believe he's straight up. And so it's the only place I recommend, and the description or the link to how to get to the Bookmap Discord chat server. And then you go look for the Traders Lab is in the description of this stream, always, every day. So we're looking to open here in 8 slim little minutes. And I think I've gotten all the stuff done. One thing I always forget to do here is the range requirement, which is an additional part of my trade plan. And that is, but it's an important one. And it says that I must have a unobstructed path from my proposed entry to my risk neutral scale. You'll recall you recall that's 12 ticks or 3 points. So if I wanted to enter here at settlement short, targeting the overnight volume point of control, which is here, I could not possibly do that because this is 29 ticks, 55.29, and here's 55.27 half, and here's another one at 55, and here's another one at 55.26. There's no spot between here and here where there's 3 points unobstructed, meaning there's levels and liquidity in the way before you get to the scale. And if you're I'll talk about trading as a business in a few minutes, but once you've established mathematically and statistically that a particular setup and criteria has an edge, there's it greatly increases that edge by making sure that you don't have 13 things and levels in the way, which typically retail reacts to. If you approach value area or a VWAP from above, typically it'll bounce. Well, you want to get through that to get to your scale. And same way with mid and all these other levels. So that's a requirement that I always forget to mention. In sequence. I think I've pretty well got this now. Talk about the trading plan. Well, I guess we can do that right now, actually. So business, trading as a business, rather than, 23. I'm trying to keep the timestamps straight here so that it makes sense in this stream, because I'm assuming I'm going to get a trade off, and then I have to have those timestamps. But to approach trading as a consistently profitable real business is completely different than approaching it as a video game or gunslinging or predicting where the market's going to go or any of that stuff. The first thing you got to realize is that trading, the market is random. And it's statistically true that the outcome of the very next trade is always 50-50. So you are a fool if you think you're going to predict where the market's going and then you feel guilt and sense of I was wrong and I'm a loser, all this stupid stuff. It's a random market and it's 50-50. The key to this business is you identify a particular setup, whatever that might be. Let's pretend it's the VPOC migration, the volume point of control migration, okay? So there's the VPOC migration down here. Price comes up through there, comes down. Whatever the setup would be, whatever the criteria would be that would validate, that you think validates your setup, you capture at minimum 50 trades with that specific setup and criteria. And the criteria can't change. The context has got to be the same. The stops have to be the same. The scale's got to be the same. If you change any of those things, then that trade cannot be in the data set because they're not statistically significant with each other. You're not comparing apples and apples. And that's what you want to do. After you have done that, and to do this in a live market takes forever. That's why I think back testing that over a large data set is the way to go to identify that originally. Then you can forward test it to narrow it down and make sure that it all works. And the idea of this is you want to capture that sub data set and determine mathematically, statistically, does this setup and this criteria have an edge, a positive expectancy, a positive probability that it will meet the range, the risk neutral scale first. Then the second one would be the runner. Depending on where you set the runner, you can play with that parameter. You can play with the stops and the whole basic setup, if you want to. But you have to identify that particular trade setup and criteria has an edge. If it does, this is all done away from the live market. This is all homework, and it's the work of trading. After you've established that it has an edge, your job as a trader is to take every one of those trade setups and criteria that present itself in the live market without fail. Mechanically, bam, you enter that trade. And you rely on the law of large numbers for that edge to manifest itself positively to your bank account. What this does for you psychologically is you're not surprised by anything. You see the setup start, you see the criteria fall into place, and you see the trigger. So you anticipate the entry to the trade, and then you know that it's 50-50. So if you've done everything correctly and you've properly vetted the trade, and say you've got a 60% edge, you know that 10% of the time you're going to win. I mean, you got a 60-40 or 60-50 or 40 edge, right? If that sounds familiar, it's the exact business model of the gaming industry from the point of view of a casino. They play absolutely no games which they have not clearly identified an edge and specific rules. They realize that gamblers will win, that it's a random market. That has nothing to do with it. Their only mission is to deal as many hands at 21 in a day as they possibly can. Somebody wins, good luck to you, Screedle. Big winner here, blah, 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 get a sky cocktail, whatever that is they say. I haven't been to a casino town in years, but, and go to any casino town or any place and you will see, ask yourself who's making the money. And we've now opened at 27.29, wherever that went. So it's 27.29. And what I start to do now in the middle of that conversation is to track my migrating volume point of control. And I do that so that I have these flags right here in front of me to see where it's going. Sure, the line's plotting on both my chart, my RT and my book map, but pretty soon as the day progresses, that's going to scroll off the left so I can see everything right here. All right, back to the trade plan. Trading as a business. And so by the fact that you have a vetted edge and you take it mechanically and you know that you're not tied to the outcome because you're not predicting anything, it's just an anticipation, that dramatically relieves your emotional baggage. And when you've achieved the risk neutral scale, which means the worst that you can possibly do in that trade is scratch, it's paradise. I mean, there's all the pressure's off. Then you are able to focus rationally and logically on trade management. Okay, so that's where that is. Hopefully this all worked. Where am I now? VPOC migration. I talked about that. Okay, boom. So you'll notice that the VPOC migrates a lot at the beginning, and that's because there's very little volume. We're now at 1877. The minute this line right up here has 1878, the VPOC's going to migrate up there. That simple. Down here it was 402, then it was 427. It jumped up there, and then it went away, you see. That's how that works. It's just simple. It's not magical. It's just plain old math and numbers. That's all. So we're trading up a bit. I would expect an open auction. We were balanced and rotational all day yesterday, and we were pretty much so all night. So I would expect that maybe a little profit taking here, but primarily a situation of an open auction or rotation. That's what I think. And it's typical for the market to be a little bit muted or reserved when it comes to the day before non-farm. So that's not unexpected either. And we have a couple of numbers out here in 12 minutes or so. So that would be 845. We've got a global composite PMI and services PMI. And then the top of the hour, we got ISM manufacturing employment, non-manufacturing employment, and whatever, non-manufacturing prices. So there's some numbers coming. And let me see if I get back over to the right spot. There we go. All right, so where am I now? Well, here we are testing. What have we done? First of all, something that's important about Bookmap, at least for me, is I have to keep this thing scrolled into a spot where I can see these grid lines, and I have about a 50 cent, or 2 tick between these numbers. Otherwise, I lose perspective of what the hell we're doing. Movement-wise, I lose, relative perspective. So there was our opening swing high, swing low to VWAP, pushing up to this, retesting this previous. You see I had that marked, retesting the previous volume point of control from yesterday. And what do we got here? Well, we've got look how this moved. Right into the open there, this jumped up. So the overnight volume point of control has been hit. The mid looks like it was just hit by a tick. Yeah, it is. That's why this is down here. Remember, this is just the high and the low of the first 1 hour of this RTH period. And now we're going to come up here and poke our nose into the overnight high, I think. Come on, where's that steady gone? Which has a 74.7% right here. There's a 74.7% probability that we're going to get up there and hit that. Pretty high, huh? And the previous POC, what is that one? I think there is one for that. Yeah, 65.7. So hitting this one was 65.7% probability, which we did. And I find that to be more frequent than that. That's kind of surprising. One other thing I forgot to mention is this label up here is strictly for my benefit to see the relationship and be able to look at a glance at what the opening type was. Here we go for this stat. I'm busy talking and not taking a trade, which it was 3.5 points up there. So, there you go. We're picking them off one at a time. What I was getting back to what I was going to say, I changed this just by typing that in there manually. It's not anything clever. It's just gives me the ability when I go back and look at snaps or look at the stream, I can look right up here and see exactly what the open type was. And so I know. And that's always a question I have in my mind. What was our open? That's part of the context, which I am trying to use to properly vet setups. So we tap that, bang. Now what's going to happen up here? The IB high, there we go, jumps up here, right? And in a minute, it's going to jump up here. The reason these are different, they are both pushed from IRT from the same exact level and the same chart, and they're immediate. Now you see this up here, jumped up here. This is kind of funny to me that this particular one hasn't gotten up here. Typically the line leads, there we go. The line leads the flag. The reason being the most granular refresh level I can set on the cloud note column is 1 minute. The guys that wrote this indicator have it set at about 30 seconds, and that's not changeable. So that's why this line typically leads the flag. But they're both looking at the same data. It's just a matter of when it's pushed to when bookmap refreshes. And those lines are instant on my IRT chart, which is just to my right. So on this right monitor. So what I'm going to do now is change my IRT charts to RTH period. So I can just see quickly how it relates to yesterday. And yeah, there we go. So that's that. And back to here. There we go. So there was yesterday. Here's yesterday's profile, RTH profile. Here's yesterday's RTH profile. And here we are today. Now, we are trading, we're expanding our range up. We expanded our range lower and higher. Maybe they're going to skew a little bit north. I don't know. But I think it's going to be pretty balanced and rotational today. That's just my, guess. Remember, it's just, you don't know anything. You're clueless. There's no... To try and predict is folly, setting yourself up for failure, setting yourself up for mental abuse and whatever else. You can anticipate what you think is going to happen, but the real secret or holy grail to trading as a profitable business is to do the math away from the live market and statistically vet or analyze or determine what setups and what specific context has an edge, and rely on the law of large numbers to manifest to your account. And that's not just me cooking this up. Jim Simmons, Dalio, BlackRock, Sosnoff, Tasty Trade, Mark Douglas, pick one. Pick any successful trader or educator that really knows what they're talking about. And I'm not talking about rear view mirror trading, internet guru bullshit. I'm talking about real people that trade successful real businesses. All have the same. It all boils down to the same thing. It's about your edge and calculating your edge statistically, and then trading that edge every time mechanically, being agnostic to the direction. In some cases, it saws off. Those guys, they're market agnostic. They don't care whether it's stocks, options, futures, whatever. They trade them all without emotions because they're just trading the probability. I don't have the facility or the horsepower behind me to calculate probability and all those things, and I focus, because I'm not a good multitasker, I guess, on one market. In this case, it's the ES. And I'm struggling trying to teach myself, Python and a bunch of crap to accurately and expeditiously determine those 50 or 100 trades that verify or qualify a particular setup and context. And stop and think about okay, so is a 12-tick stop too loose or too tight? Does that need to be moved around? What happens if I move it to 15 ticks or what, you know what I mean? And then you run that back test and see what the stats are. What about the scale? Is it at 12? The scale has got to be equal to the stop in order to be risk neutral. So it goes without saying. But, let's say it's the typical package I have now of 12-tick stop, 12-tick risk neutral scale. What about the runner? I have it at 48 ticks because it's easy for me it's a 4 to 1 risk reward ratio, and it's away from the active market enough that if I want to change that, it's not breathing down my neck typically. But maybe 24 ticks or 36 ticks is much more, you hit it a much higher percentage of the time. Those are that's why you've got to use some sort of efficient, accurate backtesting method, in my opinion, in order to identify. Imagine if you try to take all those variables with replay or some crap like that. Jesus, it would take you, 2 lifetimes to figure that all out correctly, I believe. And what I find a lot of times is that guys, they just, this is my vetted trade. And I say frequently in the chat room, in T-Lab, which is the only chat room I go to, can you show us that data? I've never seen anybody do that. But what is the specific criteria you use? I've never seen one guy do that. They all say that. Lots of them say it, which is, I find disappointing. But, Tom is different. I'm talking about people in the T-Lab, members like myself. So it's the best, but it's not perfect, I think. And these assholes with RMT and a rearview mirror trading, just ridiculous. And I'm even talking about Bookmap. I'm only recommending the Traders Lab and Tom B. Other people in there, other streamers or educators or whatever they call themselves, I've listened to a few of them, and it's just exactly typical internet scam bullshit, exactly the same thing. So I'm not endorsing everything to do with Bookmap Discord by any stretch. But the T-Lab and Tom B specifically, I do without reservation, or with at least minimal reservations. Wow, that IB high pip was good, and I suppose you could say that this test back up here could have been considered a trigger for the mean reversion back to the mid VWAP and potential POC. Now we're back to the overnight, or to yesterday's POC, spot on the money. This is the second or third time. And dropping back off of that again. I can't even get a, they keep doing it right in here. They're pretty happy with that level, I guess. I would think they might want to test lower. Now, they've moved that IB high out a couple of times and tested nearly up to yesterday's value area high. I would suppose they're going to go lower, but that again, you remember my range, right? So there's overnight volume point of control, today's volume point of control, developing value high, settlement, full session, open. I mean, there's no place where there's 3-point scale. No place. So if you tried to short right here, you're just gambling. You're kidding yourself. There is no, definitely there is no trade that's from the VPOC out. There are trades, and here goes that lower test that I was talking about. The typical rotation, the typical most frequent trading environment is rotational, and it's mean reversion, outside in, outside in. Outside in, outside in, outside in, outside, probably going in. Same thing day before. That's how a rotational balanced profile is generated. That's just a graphic representation of what's going on. And that is the majority of trading days. Much far more, and I don't know the exact percentages, so I shouldn't be saying this, I guess, but the majority of a rotational days compared to a trend day is substantial. Very few trend days compared to rotational days. And if you stop and think about it, the market typically is, what are they trying to do? They're trying to make money. Guys are speculating, It's a zero-sum game. For every buyer, there's a seller. So, what are they up to? I think it's going up. You think it's going down. And so we sell. And then, depending on which way it goes, because it's a 50-50 random market, one of us takes profit and one of us takes a loss. That's how it works. And another thing to consider about that is when everybody thinks the market's going down and everybody's shorting, like day before yesterday, who is selling to them? Typically, I believe it's the higher time frame traders who are selling to all the shorter, weaker hands, retail types. And how are those high time frame guys going to get paid, going to make a profit? Okay, if they're selling to all the people buying for the uptrend, pretty soon they're going to drive that market lower to catch all those stops, to get all those retail guys out to make their profit. That's how it works. It's not like the stock market where there's a giant pool of Exxon stock sitting someplace and you can trade that long all you want to. You got to borrow the shares in order to trade it short. It's not like that. This is a zero-sum game. For every seller, there's a buyer. And in my experience or my belief is that typically the shorter time frame people are working the market speculating, just as I am. And if I'm short, some higher time frame guy is selling to me. Is buying from me. If I'm selling, somebody has to buy. For that guy to make profit, what's got to happen? It's got to go above where he sold it or where he bought it. Means my stop is, and the simplest way for them to do that is let a whole bunch of dickheads look at this. Perfect example. Test. Where do you suppose all these people that are selling this, looking for a short, or where are their stops? Right above these markets. And what's happened? Oh, somebody's coming up here now and taking profit off for selling to all these dorks down here. All these retail guys. That's what I think. I think that's, and I know that there's a conversation that the object of the market is to find a fair price and all that stuff. I don't really believe that, because I don't think, if you look at the swing daily, How can that how can fair price possibly change so dramatically in the course of a day or 2 days? I don't believe that's the case at all. Sure, there are high time frame hedge funds, big people that are making long-term have long-term strategies for the future of the S&P 500. But typically in the intraday trade, in my opinion, it's all speculation. And quite simply, it's the higher time frame playing the other side of the trade for most of the retail guys. And at some point, they're going to take their profit. And you need to try to align with that. That's my opinion. That's my opinion. And that's why, take this a little bit further here, I guess. What do we got? 51. That's why having your boy, I can't type and talk and look at this. Damn. Timestamp thing screws me up so much. That's why it's so important to have a proper risk-reward ratio, and I'll explain what I mean by that. Stops are a fact of life. They're the cost of doing business when you're in a trading business, okay? If you're trying to make a successful business on a 1-to-1 risk-reward ratio, your chances of failure are extremely high. And that is because you take one trade and it's a stop. It's 50-50. So 50% of the time, that first trade will be a stop. You've now got to take 2 trades positively to be ahead by 1 trade. If your risk-reward is 1-to-4, 1-to-3, even 2-to-1, you know, or I should say the other way around, is 4-to-1 or 3-to-1 or even 2-to-1, and you take a stop, and then you only have to take one more trade to make up for that stop and be 1 trade ahead. Or in the case of a higher risk reward, in my case, my risk neutral setup is 4-to-1. I can take 3 stops to 1 win and be ahead. That's why I believe the risk-reward ratio is so important. It's like the old saying here. It's, 1 step back and 2 steps ahead. That's the problem that you fall into so quickly. And that's something that needs to be taken into consideration. The next important thing to think about here is we're now approaching the first 30 minutes of trade, right? So it's time to talk about the IB statistics. Remember that the IB high and low is just the high and low of the first 1 hour. So they are, and it does not set until 9:30. There is a long known IB statistic, which is real high, 98 or 99% of the time. Either the high or low is taken out by price action in the balance of the regular trading session hours. That's from 9:30 to 1600. Could be the first second, could be the last second of the day. Okay, but it's not really a tradable stat, but that's well known. That's the IB statistic. Well, a fella in the Traders Lab named Rod, who's real clever and a good coder and trader, did the statistics and determined that the high or low of the first 30 minutes has a high probability of being extended one way or the other in the second 30 minutes of the regular trading session. So they refer to that as the IB30 and the old-fashioned stat as the IB60. And I often speak about that as well. So pretty quick now, in about a minute and a half, we're going to have the first 30 minutes done, which means this is where we are for the IB high, and this is where we are for the IB low. And there's a high in the 90s somewhere, I think high 80s, low 90s, that probability works. And it has to be in an alignment with context and all those other things before you take a trade on it. But it's interesting to watch. So let's see after this next minute happens, which is right now. Not quite. There we go. Right there's. We're at 59. So we got a minute left. And after 9 o'clock, it's 80% chance that the high or low of the first 1 hour, in other words, the IB high or the IB low so far, will be extended. And if you had to guess, just looking at the market, my gut guess would be that the first one that's going to be pushed is the IB high. Just guessing. But that's because where we're trading right now. And there's, as I say that, it sells down. So that's not really, that is a potential, trade setup to vet. One of the ones that I'm thinking about, but I have to do them one at a time. So there we go. 9 o'clock, right on 9 o'clock, we took out that high. So that trade, that statistic is set. And coincidentally, there was a number out right there. But the IB30 stat has been fulfilled. Boom. Now in a few minutes, the line will jump up here, followed in hot pursuit by the flag because of that delay I was talking about. But that IB30 stat has been satisfied. And I think hopefully I explained that well enough. What's going on here? This looks like and there we go again. Now you see that the line jumped and now the flag followed, and we've already pushed it again. So we continue, and that's something about the IB30. It can happen 50 times. It can happen actually, however many seconds there are in 30 minutes. But you know what I mean. It can happen 60 times, 18. It could happen 180 times, or 1800, whichever it is, in that second half hour. All it says is that the high or low of the first half hour is extended by price action in the second half hour. And it can happen a gazillion times because these levels will continue to follow the high and the low up. At 9:30, they will cease to move. And then the IB60 stat, that's only once. After that, we have some other setups in the T-Lab called the IB continuation or the IB failure, which are also very good. Yesterday, they were excellent trade setups. I'm sorry. So there we have it's now been pushed again. There goes the line. And now in about 30 more seconds, up will come the flag because of that refresh time. That I can't do anything about in Bookmap. Obviously, IRT is, done and dusted a long time ago. And if it's easier to visualize, here's the open. Here, the green line is the IB, developing IB until 9:30 when it will become static. And so what is our context now? Our context now is up. We got higher lows. Come on, mouse. Higher lows. Higher highs. This thing with the goddamn, it has to rethink each one of these movements when it's got the crosshair. And I don't know why it has a problem doing that, but I get a delay all the time. And this is as fast a machine. I build my own machines, and this had the latest and greatest stuff that was available 2 years ago when I built it, or 3, I guess almost 3 now. I'm thinking, Jesus, it's a long time. Time passes fast when you're having fun. Huh? And we got a little low volume area here where they hardly auctioned and blew through that. Now we got a new little distribution going on up here. 9 o'clock. No more news today. I don't think. I could be lying, probably. Look at the real report. I guess at some point I've got to actually enable this report to make it a lot easier for the stream. I don't have any, office or anything on my trading machine for the sake of clean and lean and clean, mean and clean, lean and mean, whatever. Well, we do have stuff out. We've got the S&P. No, those have all been hit. Why is this not updating properly? This looks funny to me. There we go. Yeah. What have we got left? We've got crude inventory, Cushing crude inventories, and the Fed balance sheet at 1500 is at 1530. So we're pretty much over with news now. So here we go. And we're at 906. They've extended that IB high. The IB 30 has now happened, where let's just look. The IB 30 has happened once, twice, 3 times, I guess, 3 times in this second half, this second 30-minute period. And we've got now multiple tops up here, so that's going to blow out of there again. And we've got a micro composite high volume node. Oh, sorry, we got a micro composite high volume node lurking right over here. What do we got above us? Well, previous RTH high. Oh, sparkler. That's got to have a stat around it, doesn't it? We didn't open higher in range, did we? Huh. 51.5% is what I think the previous RTH high is. I'm kind of, God damn it. I always hit equal thinking it's going to go somewhere, and then I'm always wrong. Oh. Okay, now, the study over here, a little bit side knowledge here. The study highlights the column which met the criteria. So as far as this study is concerned, we opened higher in range. Oh, that's right. Why am I thinking lower in range? Stupid. That was brain dead. I'm sorry. Overnight high, previous high. I want the previous high. Where'd that go, somebody? Help me. Previous value area high. Where the hell did P high go? I'm probably looking right at it and not seeing it. There's previous mid, previous value area, previous close, previous POC, previous high. There we go, 55.7. Okay. So call me a liar for 0.2 of a point. Was that it? 55.7. Yeah, okay. So 55.7% probability we're going to get up here and smack that. Now, you see how this looks really close right here? That's because I don't have my proper setting for my range. And we're actually a hell of a long ways away from that if you get down where you can get in where you can see it. See? We're a long way. Well, we're at 55.48 and this is at 65. So that's 10 handles to this previous RTH high and the IB high. That's why Bookmap is, I find Bookmap to be a helpful tool, but it's real easy for me to get my perspective screwed up. That's why I try to keep it dialed in this way. And I don't know if I mentioned it, but the heat map over here, these lines, these levels of liquidity are just graphic representations of levels of resting liquidity in the order book or in the order book or the dome. This bullshit is bracketing algorithms, which comes on at about 10 minutes to 7 every day. It has for months now. I have yet to figure out what they gain from doing that. But the nice part about this graphic representation, better than, for example, Jigsaw, which also has a heat map like this and probably others, you can see where that liquidity hit the book. You could see where it thickened up or where it lifts off, etc. Like here it came in, here it lifted off. So that can tell you something. If there's a bunch of liquidity holding the top down and they lift that liquidity off, that could be like taking the top off a pot and up she goes. But I guess what the bracketing algo is up to is trying to skew the edge or minimize the edge for retail people using a heat map. That's the only thing I can see. And I say that for this reason. In order to put 1,000 or several hundred contracts at a level in the order book, you've got to have a big enough account to do that. I can't go do that. Nobody I know can go do that. I'm not that kid from England that was trading $1 million, in the morning. But so that tells me that if they have this large account size, it's not some weekend retail traders. It's some larger, higher time frame player. And those people, in my opinion, don't do things for the fun of it. They do things for the profit of it. So I assume, following that logic, that this bullshit has got a very real monetary reason to whomever, or, whether it's one or two or who the hell knows, players that are running this algorithm. And if I would like to figure that out, because I assume it's common wisdom that, hook your back to, we're like a fly on an elephant's ass. So if you can hook yourself in alignment with context and with in alignment with context, that's how you make money, by following those bigger players along with the market. And I'd like to know why they're doing this and how I would be able to understand that and follow it. B, it's just annoying because it screws up the book. It screws up the heat map and the representation of the heat map in the book. This liquidity has been here for a long time. It's 136 contracts. This dickweed, it's been here since right there. Since whatever time that is, 9 something or another, right? And it's still sitting in there, despite what this algo dork is doing up and down and all around. So is this one. So that is, you can still use that heat map, but it's not quite as accurate or effective, I think, as it was before the algo showed up. And I'd love to figure out what they're doing, because I don't believe somebody with enough account size to enter several hundred to 1,000 contracts at a level is doing something for the fun of it. That could be wrong. Okay, so I hope I got all those numbers. Let's see what the overnight high was. 74.9. Oh, I did get the wrong. No, I don't. I got the right one. Okay, that's good now. I was just wondering if I'd gotten the wrong levels, but I didn't. Okay. So we've extended the overnight high and continue to do so. Just pushed it up again here. And something's wrong here. Price is trading way the hell down here. Why aren't I plotting this down? Do you see that? Something's wrong with RT. There we go. This white line here is the plot, and this was sticking way up here. And I can see where we're trading down here at the VWAP, both on IRT and on Bookmap, but it wasn't over there. So that's nasty. Yeah. My previous trade rig that I built in Kuala Lumpur, we lived over there for 11 years or something, which is now my daughter's gaming setup. I built with called AMD stuff, right? Ryzen 9, 64 gigs of RAM, and I think a 30. I think it's an RTX 3080, 3090, 3060, something or another. NVIDIA GPU, and then all the usual crap. It's, water cooled, and no, it's air cooled actually. And all the, usual crap, 64 gigs of RAM and big power supply, stuff like that. Anyways, and that thing was always, I never had any problems with delays or blazing fast and all that kind of stuff. And she still trades it crap. Uses it hours and hours every day. And when we got over here, I built this one, and I thought I would take advantage of some newer technology. And this is an Intel i9 12900K. and it can use. It's got 64 gigs of DRAM. I can't think of. Can't think. I'm thinking about this market. DDR5, whatever it's called, RAM, the new RAM set, and the Intel chip. I've got a really good, I think it's a 3090 and NVIDIA RTX GPU, 3090, I think GPU. I'll have to look at the specs. It's been a few years again since I built it. But it seems to have like that bullshit of the mouse hanging up over here on IRT. Well, why is it doing that? And sometimes this thing chokes up with calculations. There should be more than enough computer. And when I look at the ARC crate and see I've got all the rest of the stuff, liquid cooled and all that, by the way. But anyway, when I look at the stats from the ARC crate, it's like running 30% utilization. So there's no damn reason in the world why this thing should be choking in any respect that I can figure out. And yet it seems to do so, which is disappointing. So once I get to the next level of trading my business here, I will, as with any business, you want to keep good hardware and, good tools for your business. I will really give a lot of thought to going back to MD product, probably a thread, and I'm thinking about looking at a Threadripper. Typically, trading doesn't require a big full-powered GPU. Typically, like gaming, because we're not ray tracing light and doing all that instantaneous, super heavy-duty calculations. We're not doing much. What's it displaying here? Some lines and some bullshit flopping up and down. It's really not doing a hell of a lot of stuff. So maybe it's just the wrong purpose. I don't know. I know just enough about computing and building them and stuff to be dangerous, but maybe there's something I missed. I'm not exactly over the moon excited about this machine in terms of performance. It's rock solid, DDR5 RAM, all that, newest, greatest crap and gazillion threads and whatever else. But like bookmap choking or that mouse fluttering around there on IRT, and that should not be happening. This should be multi-threading and just waiting on the data, not having the data waiting on it. So yeah. Somebody's saying they got long at 37 here. I don't know how they figured that out. I guess I'm just glancing over the TLAB. Oh, I guess these tests down here. And then below VWAP. Now, this is not a trade that I would think was a viable deal. There are structured trades in the TLAB which are VWAP or mid VPOC. And with the market trading down like that, that would have been the way I would be looking. This guy in the TLAB got long around 37, and he's holding for a dump or IB high. So it looks like he's going to pay out well. He's now at 47. He's got over 10 points, and he's going to be in at about 15 by the time it gets up there to the IB high again, apparently. So that's the difference in traders. Everybody sees the market a different way, right? And I will say that my preference typically is short, and I have to be constantly aware of that fact. Remind myself of context, remind myself to always, in my opinion, you always want to be in alignment with context rather than counter-rotational, I believe. that all reverts back to the trying to enhance the edge that you have established for a properly vetted or statistically verified setup. It's just like the risk reward ratio and the risk minimum 3 lot, or 3 point range requirement for entries. It's the same thing. You want to be in alignment with the context that just further skews the likelihood or the risk in your favor, in my opinion. Now, Fars down here, he got at about 37. He got long, counter to what I would have thought. Just initially, when I looked at it, I was looking lower at the VPOCs, and he's now just going to hit about 15 points. 60 ticks. Pretty sweet. And he's just typing, he added on the pullback to 48. So where the hell that is, I don't know. Now he's, these couple of guys there on the T-Lab have really seemed to have really come along. I mean, obviously anybody can type bullshit, but you have to assume that people are not to start with. Some are obvious and some you believe, or at least I do. And so he's going to do really well. He says he got long again, or added to his position on around 48, which I'm finding a little. I don't see a pullback at 48. Huh. This is 48 half. And I see no pullback at 48 half. And I guess he's calling this a pullback. Beats the shit out of me, dude. Oh, yeah. No? Oh, I guess he figures this little consolidation right here was a pullback, I guess. I don't know. Anyway, great trade. So all the reports are off the table, and this fella here is pretty happy with himself. I'm sure trade managing up below these swings, which is cool. Well, and here we are getting ready to set the IB stat. Now at 9:30, this high and this low and the low will cease to move, and the IB stat will be on the table. The IB 60 stat will be on the table. You see how we got right up to it. 3 minutes from it. Now, are they going to pull back to this developing value area high, trade up to the stat? That's an extremely good possibility. I'm not sure that I have enough confidence in that to get long there. But I should have taken my own advice. And here we go for the IB stat, right? Well, not quite. But so if we just look backwards here, if we took this test of the developing value area high at 48, so there's 51, there's the scale, risk neutral. And then you just got the helmet on, looking for whatever's going to happen next. This is a hard area for me. I like to short, and looks like it's going to fall through the developing value area high. But so far, the context is north. We've been doing higher highs and higher lows. So clearly, the context is north. We've got higher highs and actually higher lows. So that's a toughie, especially because I like to short shorting this developing value area high back down to the VWAP and perhaps the VPOC. Interesting to see how low this VPOC is, right? How far down here? We're at 51.33 or 55.31-ish in that area. But what's going to happen here pretty quick is, let's just have a look-see at this. We've got about 64.05. Well, all they've got to do is get this price right up here to 56. To the 49 area. When this right here says 64.06, this VPOC is going to migrate right up there. So that's could be relatively quick. I haven't looked at my other machine, but I think I probably have a meeting at 10. Usually do. Yeah, pretty quick. And what that will say is that price is being accepted higher. Value is building there. I'm not sure exactly how that works when the POC migrates, whether that would have an instant effect. It'll be interesting to see the effect that has on the value area. Because we're looking at this, there's 61, right? With 300 more contract. We're going to have the POC up here at 49.25-ish. Will the developing value area high move above that? I don't know. That's interesting, though. That's interesting. There's that move's coming pretty quick. Now they got about 200 contracts or less. 100. There we go. 3,300 contracts. Yeah. Pretty easy at this point. Another 100 contracts, but they haven't got there yet. Right here, or 109. 92 contracts. I think it's something. 6405. So they got to get about. It's actually probably a little different. They'll get it here pretty quick. Or not. That was a stop run for all of these stops right under this level, this consolidation right here. To this low volume area. See why this is getting ready to be the VPOC build up here. That's a typical maneuver, I guess. So I need to start thinking about, I better check and see if that somebody's been nice to me and cancel that or something. I'll start this other computer up. Have a quick look. Uh-oh. Crap. All this shut off. I guess I must have restarted that thing last night. I didn't remember it. Oh, well, we'll get everything back open again. Good thing I opened it up. I had a million emails, of course. What is all of this? Okay, let's see. Calendar. Okay. 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 Conference. Oh, man. Product, I could care less. What are we doing here? Did we switch yet? No. Oh, they're just toying with it. Let's see now. What do we got? Monica. Oh, look at there. Solar back down to the VWAP, and now are they going to go down here and take the IB low? Wow, that's pretty funny. Heading for the IB low. Got everybody all excited, and down she goes. Well, I'm busy typing something and didn't even see that, and wouldn't have probably gotten into it anyway. However, this is where to go? Wrong mouse. This is the VWAP mid to VPOC is a structured trade set up in the T-Lab. And if you looked real close, you got down here, pulled back up, didn't get anywhere. Sellers came in. That would have been actually a qualified trade. There was 3 points down to here. But I didn't see any of it. I was typing on another machine. So, timing is everything. You got to stay. I need to stay really focused and engaged only on this one thing at a time. So that's disappointing, but that is that would have been a bit of a counter trend trade in that most of the, as I've been talking earlier, was higher highs, higher lows. But when we broke through that mid and VWAP, from that kind of put us in a mean reversion from this low volume area to the mean. And that's exactly what we've done. So now completely impossible for me to get involved with any of this noise right here. Look at all these levels in line to the IB low, even though that's where I'm guessing they're going. And that's pretty funny, boy. They pushed that IB up about just a few minutes or a couple of minutes before the 9:30, and traded it all the way across. Tell me it's not speculation. Where am I here, Sean? You say, so there's the IB stat taken out right there. and they took the IB low. Go figure. See how they toy with everybody, and I believe that's absolutely higher time frame manipulation and speculation. Tell me that after all of this trade here, that the perception of value and the fair price for the VWAP or for the S&Ps is down here, and they take out the IB low. Now, will we have a IB failure and trade back up, or will we have IB continuation and trade back down? I'm going to be getting ready for a meeting here, and I'll be honest to say I don't know. So I'm just going to keep my eyes open and stand back. When you don't know, I stand back. It's just me. And I had it on the wrong screen, apparently. What I was looking at was... Yeah. Okay, now I got to get going here with move my headset across and all that stuff. Wait a minute, I don't want to do that. Why did this move? Huh. I don't know. Anyway. Also, here we have the full session volume profile migrating over now, following the RTH. They're both aligned. Yeah, there was that test. Then the IB stat, followed by an IB failure double top, deal down, which is dicey at best. And now VPOC migration down here lower. We've gone through this previous microcomposite VPOC that was naked, taken that out, and we've yet to close this gap. Whether any of that means anything or not, just observations. I used to have the correlated market of the NQ plotting here on my ES chart, but I took all that stuff off when I was having all these problems with the which reminds me, I don't think I ever turned this back on, absorption indicator. I was having a problem with that when it calculates. It was overloading bookmap. You know, some people have 10 or 20 windows open. I have one. What to think or say. But anyway. We were outside in, and now looks like we're going back outside again. But that was not the place to get in the trade. One of the problems with entering these kinds of trades is it's basically a breakout and see, look where your stop's going to be, right in the middle of heavy traffic, and it's right on the POC. So that's a problem I have with this thing. And I have a lot of problems, but that's one of them. Yeah. Oh, God, this is a pain in the ass. What the fuck is this? $250. Why is that got a split there? What is the fucking question? Like that. Okay. 39, 20. First question is this piece of shit in? Is this thing in? I need this. Well, so yeah, this is kind of frustrating. Look at these level piled up here. Impossible for me to do anything. There's nothing but 1.5 to 2 points between them. That's pretty disappointing, but it is what it is. I missed a couple of good moves doing other stuff. And now we're about to the 2 o'clock hour. I'll be shutting this off at 3. And I've got a school run. Yeah, kind of uninteresting at this point with levels like that. Well, there was my VWAP to VPOC, and I didn't get my fingers fired up right here where I wanted to, and I will certainly not face it, but lovely trade. 15 handles from here to here, and as many seconds, I guess. Been around here all day and then hanging in the door doing pull-ups, and as I'm bored, and whoop, there's the thing I was looking for. Amazing. Trading is truly magical. And now this would be a real dicey entry and trade. I mean, it could continue. This could be the pullback for another leg down, but with the VPOC right down here, and what else is down here? Developing value at a low, the current low, pretty. Yeah, I wouldn't say it's a high probability short. I also wouldn't say it's a high probability long with the mean reversion, because we're in the middle of no place here. This is the VPOC, which is the most traded price. So getting up in here, the outside edge down is another opportunity for a short. I guess that's 7-8 points if you, because you don't have this. I don't have this scaled out right. Oh, there, it makes it look a lot better. Got a big iceberg down there with 107 contracts still holding on. Oh, yeah. A little too spooky right here around 2 o'clock for me. Some couple of guys caught this 15-ish level out of here. And I guess if you were real good about that, you sellers down, you took this divergence maybe in here somewhere, and then shorted it. So yeah, that was a nice read and a nice trade. That's what she said. She said. Tired. Flower gal. Flower gal. See how these, this is all starting to stack up down here? That's that absorption indicator. There's not any big spikes of volume there. I mean, little bitty dribble of shit right over here. So what? It's ridiculous. Now I'll shut off the absorption indicator and this will immediately disappear. Ridiculous. Their own indicator doesn't work. 206 contracts in that iceberg. Wow. That's 206 of them traded out right here. And then some here, I guess. Doesn't make any sense because you got stops out here. So I guess they're absorbing. So I'll be watching for the 2050 or the 1450. See what happens. $299 stops out, 616 for 9 icebergs. And here we go some more. Yeah, see with that absorption indicator off. Nothing right down here. And I still have stop sweeps on, I'm pretty sure. And that's not the culprit. It's definitely the absorption indicator. Too focused on Discord rooms. I keep missing these drops. Not that that's, like in this case, a bad thing, but it's pretty spooky right here. We've got another 10 minutes till the 50. Now they may break it down. Who the hell knows? Well, here they go again, huh? Boop. Now, are they going to run it down here to the POC once again? Or just come to this support level right here? I'd say I answered my own question. Looks like the POC is a hot spot. And my VWAP to VPOC discussion was pretty well thought out, I guess. It does kind of fly in the face of all of the structured ideas, though. It's not the outside. It's actually the bottom, an outside for in up here. But, it's working, so maybe I think too much. I guess that's probably it. That's probably it. And whether they'll actually get down there and tag that POC, that's another question. Looks like this little distribution right here is holding pretty strong. And that's incidentally exactly the previous VPOC level right there. So, yeah. We've got 6 more, 5 more essentially minutes to the 50, which is usually that's a max. And then I'm shutting the stream down at the top of the hour, as usual, for the school run. I wouldn't hazard a guess as to what they're going to do at the 50, or if they do anything. But I'm going to be standing here pretty much prepared for the non-farm tomorrow, if I got anything to say about it. That's something I'm not aware of at this point. Well, this thing keeps doing that. Doing all kinds of magical shit that I don't like. This other computer of mine, work computer, is crazy. Doesn't it seem pretty strange? Oh, look at there. We had a VPOC migration here heading into the big witching hour. After all that time. If the mountain comes to Mohammed, I guess, if Mohammed will come to the mountain, or however that saying goes. Now, there was a VPOC migration trade that I guess would have worked just fine, but I don't really know how to spec them. Don't know. I got no idea. I'd love to have that be the trade that I vet, the first one to vet, but it's probably my least successful. Here we go at 50. Yeah, must have hit 50. Yeah, there we go. Now we're going to have a bunch of jumping around and party hi-ho-hos and a couple other things we're probably. Out on a short. Sometimes I don't understand what the guys are talking about. I think he got out on a short when the VPOC migrated up. I think that's what he's saying. There's something about that 3. I guess he was short down here somewhere. And I don't know. Don't know. Now I have to get antsy because I got to stop the stream and go pick up my daughter at 3. And so I don't want to be stuck in a trade and having to manage it. That's a pretty scary situation. But with that liquidity, I sucked right through that at the round number. That's for sure. Sucked right through that. Quick as a bunny. The other day, I was looking at one of these closing swing trades, and I typically mark it in or hit the bid or lift the offer, and I did that, and it left me in the dust there, left me sitting there, and went on 15 points the direction I was trying to go. It was kind of disappointing. Looks like this won't be one of those days, however. They're sticking pretty close to the MCV POC. Now, typically the closing swing trade is, if I'm not mistaken, it's got to do with out of balance market, I think. Let's see what we got going on here. Well, it's pretty out of balance, but now they're at the lows and going to test up higher, squeeze somebody out or not, or who the hell knows. Don't think I'll waste my bullets here at with 5 minutes to go. Big piece of delta happening right here. There's a lot of them clicking off right there now. And pretty soon they'll just start filling up with the balls. Okay. There's a 5-minute buzzer here coming up. 5-minute warning coming up here pretty quick. I think that'll have to be about it for me. So I would suggest that I would pick this back up in the morning. Sir. City for sure. No such trade today. That might hit in right at 3 o'clock at the cash close, which is also, but that's, I don't have the luxury of really trading that because I've got to get to school. So another disappointing day on my part. Just too distracted and too hesitant to interact. Really, quite a disappointing such situation here. Crappy. That's a crappy feeling. Pun intended. Look at this shit. Into that big witching hour. Boom! Here comes the liquidity packing on all sides? No, it didn't. Usually liquidity used to just fill this thing up. And they're going to go all the way up to the damn VWAP. 15 points, or there's 10 points right there. But how do you know what they're going to do here? I don't. I see sellers and not getting anywhere. But I see sellers up here and it's going up. How does that work? So, Okay, that's it for me. I've got to set her down now, and tomorrow.